As far as I'm concerned, you've not made it in podcast land and mortgage until you have Steve Majerus on your podcast. And so voila, here he is, the CEO of Synergy One Lending. Good to see you, Steve.
Good to see you, Greg. That was very complimentary, but I got to tell you, given the list of people that you've had on your show before me, I would say you've already peaked.
Hey, beauty is in the eye of the beholder. Did you know that?
I appreciate the invite and the time we get to share this morning.
Yeah, of course. And as I mentioned in my LinkedIn post promoting this, the taxi ride you and I shared, ironically, a year ago at the gathering in Arizona was such a pleasure. Didn't know you very well other than just pleasantries and in passing, but to have an opportunity to spend 30 to 45 minutes with you talking to you about the business, I left there in awe of how your brain works. So I hope to be able to share that with everybody else. You've got such a fascinating story. You've been in the industry for so long. I believe that you started in 1995. Did I read that you were at the same CMG? Did you work for the same CMG that is today, or was that a different CMG?
Same CMG. Yeah. I worked, actually started the mortgage banking unit for Chris in 94, I think, technically. And started the wholesale division while I was there. And so, yeah, when you get the chance to be at the beginning of something or something close to it and get your fingerprints all over it, those are unique life experiences that obviously help later on in life as you get longer and longer into your career.
Yeah, and you've been in it for a minute here. I can't wait to talk about the evolution of your current role at Synergy One Lending. But as I look back at the history of Steve Majerus, you were the SVP of Capital Markets at a very interesting time that I think has got some parallels to today. That was at eLoan. And I recall seeing you in an interview talking about the experience at eLoan during the dot-com bubble. And we started to imagine what tech could do to the mortgage business as we were very early on in the internet. You know where I'm going with this. Here we are right now in this moment. It feels very similar to the dot-com thing with everyone talking about AI, but I don't think you can have a conversation these days without talking about what the possibilities are.
Having gone through that time period and gone through the IPO with eLoan, I was running capital markets, as you said, and so much transformational change. That was the commercialization of the internet during that time period, and nobody obviously knew what it was going to eventually become. But you're right. There are so many, given my life experience, so many analogies to what's happening to today, just in the sense that the internet by itself was, a transformational event for not only our industry, but for society. And AI obviously is having probably what I believe to be an even larger impact on our daily life and our industry going forward from here. So it is very invigorating. And I'm glad I'm still around to help experience it and guide our company along with our leadership team through it.
How much time do you spend paying attention to artificial intelligence and the developments?
Someone asked Jeff Bezos this same question, and he said 100% of my time. And so I can't say that, but it is it's all encompassing. Not only to make sure that I try and stay ahead of the information, understand the information, and then digest that information so that I can apply it to real life at our company and help educate not only our company into real use cases and help everybody evolve and embrace the change that's coming and or is in fact here. But it's kind of incumbent upon me, I think, in my role that I make sure I stay on top of it and add to the conversation and help everybody along.
Well, you enjoy it too, right? You lean into marketing and ideas.
I think I need to because like you said, back to my eLoan days, that was an eye-opening experience for me because I was exposed to, fintech wasn't even a word then, but all the fintech proprietary uh, implementations that we did during those days, when you got to see the power of that, and the power that it gave the consumer, the power that it gave choice in the industry, so many of those things still apply today. And
Yeah.
so I think I have to use that experience to the betterment of the company so that we can be competitive, and never be seen that we're being a laggard in what is kind of right in front of us.
What's the impact you think it's going to have on the economics of mortgage, of running a mortgage company?
I think that the opportunity is going to be properly implemented. And again, this just while the technology is early stage, let's face it, the impact I think is going to be, personally think it's going to be faster than many think, but I think people are starting to embrace the fact that this is going to be highly impactful in the near term. And I think if we can construct our process flows and some of the, again, very practical solutions and embedding it into a client experience, and have loan officers embrace it in creating those experiences front to back in a transaction. If you got the right focus, I think it will have obviously material impact on our cost to produce, and
Yeah, for sure.
improve experiences.
Yeah. I wonder aloud what it's going to do to loan officer compensation, because obviously that's it's at an area where there is friction. I mean, there's no question about that. And if you lower the cost to produce, where does that excess go? What opportunity is there? And do you have a choice if you're an IMB, but to look at how you're structured in that
Yeah,
way?
I think you hit on it. It provides you the opportunity, and what you do with that opportunity is going to be obviously dependent on each company is going to make that choice. And again, thinking through, since it's still early stage, thinking through what that impact is going to be, it can provide a company flexibility. And once you have flexibility, then you can narrow your choices to the best choices in terms of the overall impact, not only on loan officer compensation, but profitability of the company. And again, empowering the consumer to make those experiences great.
All right, let's pivot into Synergy One. First of all, I love your logo, and I love the buzz that you have on the street. You guys are doing some great things, and I want to dive into that. But before we do that, I want to go back to the genesis, because Synergy One was founded in 2013, and you helped lead a management buyout when there was an acquisition in, I believe, October of 2021, somewhere in that area. Wow. I mean, you've been at this now at Synergy One for close to 8 years. Your previous role was as president, and then you've been the CEO since you took over the company. What was that process like of getting a team and a group together, employee led, to buy that company out?
We during that time period there was so much going on. As you might recall, we actually closed on the transaction in April of 2020, and so that was right around the national lockdown during the first one during the pandemic. And Aaron Nemec, our president, and my partner in the business, largest partner in the business, were given the opportunity to buy the company from Mutual of Omaha, and we were blessed during that time period because it was a very friendly transaction, and facilitated by former ownership. So we were really lucky when we opened the opportunity to many employees to invest along with us in the company, and the overwhelming response that Aaron and I received given that opportunity. It obviously a very humbling moment in that so many people took advantage of it. It was overwhelming for us, the amount of trust that they placed in us as we embarked out on our own. But also, that was a very tenuous time period for the industry. Those were margin call days for companies during that time period, and so for a couple of months, it was nerve wracking to say the least. But once that storm passed, we were obviously very lucky timing wise, and we're able to enjoy the fruits of the environment overall, and we took full advantage of it. I can tell you that.
Well, talk about extremes. You come in, you wonder what the hell you got yourself into. You've got these margin calls. I'm sure you're payroll to payroll, as we were and so many other people were. And then all of a sudden, loans are falling out of the ceiling rafters, and now we'll go from 3% to 8%. I mean, you're probably just looking for the median somewhere. I mean,
Yeah,
yeah, go ahead.
I was just going to say, if you've been in this industry for any period of time, unfortunately, we operate in the extremes a lot. And so, again, maybe some life experience prepared some of us better than others for what it's like in those extremes, and hopefully helped guide our decision making, not only during the good times but also preparing for the difficult ones.
Yeah, you've been able to acquire some groups as well. Recruiting wise, you've done pretty well. What do you attribute that to? What's the message when you're sitting across the table from a recruit that you try and convey?
The largest thing for us as a leadership team, and Aaron really heads this up, is at the end of 23, as a leadership team, we decided to just refrain from making any decisions around the business that were fear-based. We had taken our lumps. We thought we had made significant changes in our cost structure, and once we got our heads around just putting fear aside, we knew that growth needed to become our number one priority as a group. It starts with your mindset shift from cost consolidation and all the fear that goes along with that, and getting back into the fun parts of the business and growing. And once we were very fortunate, we made a couple of key personnel shifts inside the company, put Eric Colby in charge of growth, and once we did that, the growth followed very quickly. And so we opened our mind to growth. We leaned into our value prop that we think resonated with people at the time, and the team has just executed on that growth plan just incredibly well.
I want to talk about being private equity backed. Would you consider yourself private equity backed? I'm curious to know that. I did some research here and read about the company, and it says private equity backed, but that doesn't mean that private equity runs your company. It just means that when you need to go into the arsenal or need some additional ammunition, you're in a great position. If you could just elaborate on what that means to you and how that's impacted your business.
Yeah, Aaron and I did raise some outside capital when we bought the company, and we have a minority shareholders that also sit on our board that have been tremendous supporters of us during the great times and the difficult ones. And so our experience specifically has been a very positive one, in that they've got explicit trust in us. They've been supportive all along the way. And so it has not been a detriment in any way to us, for sure. They've let us run the business as we've seen fit. We've obviously demonstrated that as a team, we've been able to negotiate some very difficult times and prosper in the good ones and take advantage of that. And everyone's different. Everyone's experience might be different, but ours has been a very positive one, and hasn't placed any limitations whatsoever on us.
Well, if anything, you can double down whenever you want, with the support of someone from the outside. Because once they're vested in you, they're all in. So there's a lot of peace of mind that probably comes with that, as well as additional pressure. I mean, it's not just one way, obviously, but that not that you needed a further driver, but keeps your eye squarely on that ball.
It certainly does, and again, it's been a positive relationship, and very smart people as well. So it's been a great experience for us.
Let's talk about tech bloat for a minute, because we have it at NFM. It's wild. I mean, it seems like every day that passes, we have more of our systems that overlap with other systems, and we've got, like everybody else, 10, maybe 15% utilization of the optional things that we're signed up with. I mean, obviously our LOS is our LOS. All of our loans go in there, and our POS is our POS, and our CRM is our CRM. But outside of that, um, it's hard because you get into this cycle, right, where you've got this agreement that matures in this month and that one and this. It's very hard to make sense of it all and manage it in a way that looks out for the productivity and the dollars. Do you have a
Mhm.
strategy that you can share with folks about that? How do you think you've done at Synergy One with managing that?
Well, it is a really good topic because it is very frustrating at times. It takes a lot of time and resource and brain power, as you said, just to try and keep it all straight. Not only just the contract components of that and trying to maintain a cost structure around the tech, but also the implementation time period, the roadmaps of your partners versus the roadmaps that you may want for your own company may come into conflict. And since we are a company of ideas and we like to innovate, it's a struggle sometimes to have those discussions with partners and make sure that you're keeping up with them and they're keeping up with you and you're in alignment. And so that takes a fair amount of effort on our part. And it is, in the build versus buy struggle, we've clearly tilted toward partnering with people. But as time goes by, I can see, and personally am more open these days to building in terms of the access to technology and being able to do that cost effectively. I think, and technology is evolving so quickly. I mean, I can't go 2 days without another AI provider reaching out to want to pitch a product. And so again, the decision making process is very, very difficult because the options are plentiful. But once you get into these contracts and you want to keep them on a short time horizon, candidly, because the pace of change is great, and you always want to stay ahead of things, but you can't be in constant disruption at your own company as you're trying to develop best practices around these solutions.
Yeah, that's broken
So,
for sure. The seat
yeah.
minimums and all these things. Although I have found that vendors are more willing to play ball these days than I've ever seen. They're clamoring for the business. There's a lot of private money involved. Um, the runway to take off and excel has been longer than they had forecasted.
Yeah.
So I'm finding that from my seat as someone that negotiates contracts sometimes with vendors. Are you seeing the same thing over
I,
there or not quite yet?
I see a little bit of improvement overall there, and of course, I'd like to see every vendor go on month-to-month contracts and just let, like Snowflake does with their
Yeah, if you have a
enterprise.
good product, let it prove itself out. Make it a product that I've got to have next month, right?
Exactly, and knowing that if you pick one CRM provider, an LOS provider, a POS provider, that you can't, even if you wanted to change your entire enterprise, it would still take a long period of time to do. So again, kind of re-earning that trust and that focus on innovation, it kind of aligns better. I think if companies would take that mindset. I understand they need certainty of cash flow and everything else, and
Yeah,
there's competing priorities there. But I care about our priorities
yeah,
more
of
than
course.
anything
Yeah.
else.
Let's bounce around a little bit, shall we?
Yeah.
Let's so from your e-loan days, right? The .com era, to right now, we're seeing all this consolidation, and it appears as if there's a race to get to the consumer earlier in the funnel. I know that at Synergy One, you've done a lot around that, and you do embrace social media. You and I have had a lot of talks over the last several years about it.
Mhm.
Um, is that the holy grail, getting to the consumer? And if so, um, do you see a path to doing that in a big way without partnering up with someone?
Yeah, I truly believe that for the foreseeable future, the origination process and loan officers specifically should develop a multi-channel approach to their business development goals, taking a piece of the traditional realtor-based referrals, and things like that, and expanding their reach via social media and other mediums so that they're all complementary. And I think it is actually the best solution for anyone that actually wants to grow their influence, grow their brand, and grow their business, to be able to do all of those things. And so we've spent a lot of time supporting and creating an ecosystem here at our company, so we can present solutions to loan officers to open their minds to considering those and making that really mainstream. So I'm not only this one type of person, I'm not only this one type of person, but I can do all of it. And of course, people are going to have strengths and weaknesses, and they're going to develop new habits and new mindsets around it. But that's part of, I think, what's required of us in the industry today is as we talk about all the time, meeting the consumer, meeting the realtor, meeting your business partner wherever they are. They're everywhere. There's nobody that is all in one medium or platform all the time anymore. And so leveraging success with realtors and socializing that success on social media, things like that, those should be basic at this point if you want to be successful and stay relevant in your, we're a retail lender, so staying relevant with an in-market presence, with a trusted brand and a brand that loan officers can leverage, and having those systems built out so that they're approachable for loan officers, they're executable for loan officers, and again, we spend a lot of time and effort on very specific use cases for people, so it's not overwhelming, because it can be.
I know you spend time on social media. You're one of those creepers.
I'm not sure. I'm not sure I warrant a creeper status.
Well,
but
I don't, not creeper in like a creepy way. Creepers, like, especially on LinkedIn. I know you pay attention to
look,
what's
I
going
do,
on.
because there's a lot of really good content, and I want to make myself available to it and observe it and absorb it and figure out how I can use that to either make myself or our company better. And guys like you and others that are putting very thought-provoking content out there, relevant not only to our specific company, but overall in the industry. Rick Roque and I are very aligned on things that I think take a modernization approach to our entire industry, that there's an opportunity now, just like during the dot-com boom, the environment is ripe for real modernization in the housing industry and the way financing is done in America today. And I think I get that via social media posts, and so I want to take advantage of it.
Yeah. How much attention are you paying to what's going on in Washington with FHFA and, as things develop, affordability and things like that?
Yeah, a fair amount. I think the discussions around whether privatization is going to take place, and loan officer comp, and this, I feel like I don't know who is going to be, other than industry people like ourselves talking about it. I don't know who is going to push this to the forefront. And if we are, going to move forward with privatization, which I think we should in some form, that there also housing, finance reform comes with it, not just privatization for primatization's sake, but there's so many other things that I think the door should be open to while that privatization discussion takes place.
Yeah.
And that I think missing that opportunity would be regrettable.
Our deficit's out of control, isn't it?
Our deficit is out of control, and
it's crazy. I mean, I see the big beautiful bill, and it calls to tack on another $4 trillion in debt to this country. That's what I worry about, man. Is like, what is the world going to be like for my kids? Really scares the shit out of me, honestly. How do you see that?
Yeah, I see it very much the same way. It's impossible to ignore what the implications of a runaway deficit is. And I'd love to see a big, beautiful bill that addresses that in a more meaningful way, because there's no getting around the fact that that we're kind of kicking down, can down the road again in trying to address it.
Do you ever listen to the All In podcast?
I do.
I've been listening to that lately. Varun Krishna, the CEO of Rocket Companies, turned me onto it when I interviewed
Mhm.
him a couple of weeks ago. I
Yep.
can't stop listening to it. I mean, they talk about this idea of growth bringing the deficit down. That we talk about the GDP at 1.7. What if it's at 2.3? What if it's at 3.0? What if we lead the world in AI? What kind of positive effect could that have? It's interesting. Yeah.
It is very stimulating discussion and very, very high level intellectual discussion being had. And again, it comes down for me. I'm very practical. It comes down to me like, what is tangible? What is how can we translate the theoretical and develop and implement policies that are going to actually lead to those positive outcomes? And
Yeah.
the frustration, with Washington in general is getting people to make progress on those meaningful items that are going to affect the very things that we're uncertain about. And so I think once we can see policy that's in place that's going to drive toward that, it becomes much, you can get behind it and be enthusiastic supporter of it, but it just hasn't happened yet. Taking the All In podcast and moving that into policy is a difficult task.
Yeah. As you think about the headwinds as it relates to Synergy One, remaining in the state that it's in, which is flourishing, what are some of the things that come to mind? That you feel like we gotta constantly be looking at this.
I think we're taking a very enthusiastic but measured approach to growth at this point. I think it seems like all roads kind of in discussions still lead to what the rate environment is going to allow and therefore dictate. Loans are hard to come by. The origination market is not robust, and so I think us refining and retooling our value prop that we get helping loan officers become and stay relevant for achieving greater and greater market share is really going to be the focus of our company. And there's a lot of branches that fall off of that. Of course, cost to produce and marketing effectively, and all those things that are really table stakes. But again, if we can equip our loan officers, both present and future, with an ecosystem that they can lean into and feel educated about and empowered with, to get other people's market share, I think that companies like ours can not only stay relevant but really accelerate in a meaningful way, despite all the noise that's going on in the market. We just we have to keep our head on straight about practical solutions with AI, cost structures that make sense, and develop experiences for our partners and consumers that are going to build that trust over time. And we have to be very, very focused on getting things out fast and implement things fast. But obviously, the long game has to be in the forefront of our minds as we make decisions about that.
You get a lot of emails. Do you know that?
I do get a lot of emails.
I mean,
I
you need like
apologize.
no, it's all right. You need someone to like monitor those emails. I mean, it's like they're coming in fast and furious. You think you'll get to all of them today? Because
I
you're
could have.
clipping. Listen. We've been talking about 28 minutes. You've had about 38 emails come in. So
I'm sorry, I did not suppress the noise. I
that's
didn't.
okay. No,
That's
listen.
oversight
Hey,
on my
you know
part.
what? It's an honor to talk to you, man. You're mortgage royalty. How do you handle stress? How would you say you handle stress? And what have you learned over the years? What strategies have you employed to not let stuff really get to you?
Boy, that's a great question. I exercise a lot. It is. I was an athlete growing up. I think that is. It's a great place to go in your head while you're exercising and kind of being fit. I think it helps your mind and body, obviously. And the other thing is too. I think I'm more methodical, even though I like to make decisions fast, and people probably think I make them too fast sometimes. I do try and stay more purposeful in the things that I focus on, and therefore the things I would like the company to focus on as well. I try and avoid the shiny object syndrome, and I'm 60 plus now, so hopefully I've learned how to do that a little bit. But again, I like pushing and keeping things a little edgy, so that we just don't fall behind. It's a tremendous motivator, and so it's why you get up every day still after doing this as long as I have, to be relevant and add value to the company so that we can stay competitive.
You have a lot of raving fans. I don't know if you can see the comment section here.
I cannot.
If you minimize your screen, you'll probably see it. Travis Newton, let's go, Steve. You're the GOAT. Rich DeMonica, awesome times. Brett Brumley, Synergy One under Steve's leadership is cutting edge yet grounded in solid principles, a company to watch for sure. Chad Mellon, let's go. Sue Rainwater, legends. I'm not sure who she's talking about, but thank you, Sue. Travis Newton, Synergy One's an incredible company. Corey Hill, what a great company. Could not have asked for a better place to come with, from Man Mortgage. Ellie, I don't want to try and pronounce her last name.
So those are thanks for sharing those things. Those are great teammates that we have at Synergy One, and just the fact that they're here watching and supporting it, that's a really, really good feeling for me, I got to tell you.
Well, let me just read, I know we're running over time here, but it sounds like this is meaningful. So let me read you what Eric Colby, who's a legend in his own right, by the way. I mean,
he is a legend.
He's always had a huge name. I've never met him in person, but I'd love to one day.
You should.
I just don't ever want to get into a street fight with him. The guy is built like a brick shithouse.
Yes,
Majerus is always focused on where the puck is going, constantly anticipating trends, technology shifts, and consumer expectations to stay ahead of the ever-evolving mortgage industry. Rather than reacting to change, he leads with foresight, ensuring the team stays modern, agile, and ready for what's next. It's that proactive mindset that keeps us at the forefront of the business. We're incredibly grateful to have Steve as a leader of Synergy One, his vision, drive, and ability to navigate. And then I can't see the rest. I wish I could. But wow, you got a lot of fans, buddy. I know it's nice to hear that because you work so hard, and I know you love your people. I mean, I know it seems like you're pretty touched right now.
I am. That's incredibly humbling to hear. Off camera would be even better.
Ha. That way you could just let the tears flow. These people love you.
It's how that is when you're aligned with people, and you have this shared vision, and people kind of see things that are larger than themselves. It's whether you're on a team in sports, you're a team in business, or with your family and friends. It's just that togetherness is it's irreplaceable.
I'll just say it's more elusive than you think. So trust me. I mean, the ingredients that you have there, it obviously is a pretty special cake, and I commend you. It really starts with leadership. It starts with the top, and that's where you sit, you and Aaron. So congratulations on all of your success. I consider you a good friend at this point. I love hearing from you. I love the conversations that we have, and I can see why people gravitate towards you. So Steve, thanks so much. I look forward to seeing you at the gathering, the Housing Wire gathering coming up here, I guess a week from today. We'll be together. Right. I'm getting in on Sunday, so maybe even before that, and hopefully you'll get out on the pickleball court. I understand last year you didn't fare too well.
No, I don't think anybody wants to see me on the pickleball court. That's for sure. But I do, Greg, I appreciate all the kind words, and you add so much to the industry into the discussion that you lean into, and I just keep doing what you're doing, and more of that. We need it. We need new thinking. We need continuous improvement, and in our industry, and you've really stepped into that in a big way. So we appreciate what you do, and Aaron and I and the rest of the team appreciate the recognition and the time we spent together.
Yeah, it means a lot to me as well. Thanks so much, Steve. Thanks to Donna Chachevsky for pushing all the buttons in the background. Also, next week we'll be live from the Housing Wire event. The folks at Housing Wire have been kind enough to give us their podcast studio. next week, same place, same time, guest TBD. I'll be tracking people down when I'm there. So it should be an interesting show next Monday. Steve, see you in Colorado. Thanks so much. Have an awesome week, everyone. Take care.
Thanks for the time, Greg. Appreciate it.
Got it.